50,000 crore rupees, 5 major deals, all in 1 week. That's the scale of transformation the Indian insurance sector has just witnessed between March 13th and March 20th. This isn't just a string of corporate announcements, it's a complete reshaping of the market. New players have entered, global insurers have exited, long-standing partnerships have come to an end, and massive bets have been placed on the future of health and general insurance in India. Welcome to A Week That Was, a new series by Ditto where we unpack the biggest developments in insurance from across India and the world. I'm Shashank, and in the first episode we're covering what might just be the most action-packed week the industry has seen in years. So before we start, folks, let me remind you that Ditto is an insurance advisory platform where you can get our services for free. Right from understanding health insurance or term insurance policies to purchasing one, you have our support from application till the claims. So if you haven't gotten a health or a term insurance yet, then book a free 30-minute call with our IRDAI certified advisors, and the link to do that is in the description. Let's get into it. We'll start with the deal that kicked off this whirlwind week, the acquisition of Magma General Insurance by, you guessed it, Patanjali Ayurved and the DS Group. On March 13th, Baba Ramdev's Patanjali, along with the DS Group, yes, the same people behind your favorite Catch Masala and Rajnigandha, acquired a 98% stake in Magma General Insurance. Patanjali took up 74% stake, investing around 3,330 crore rupees, while DS Group picked up the remaining 24.5% for 1,102 crore rupees. That values Magma General Insurance at roughly 4,500 crore rupees. Now, why is this deal significant? Here are a couple of reasons. First, it marks Patanjali's formal entry into the financial services sector. Until now, they've been a dominant player in FMCG, wellness, and retail. But this move shows clear intent to build a diversified business empire. Second, DS Group has traditionally been associated with FMCG and tobacco, so their move into insurance indicates a broader ambition in financial services as well. One key thing to note here is how this acquisition could transform distribution in the insurance space. Patanjali already has a massive retail presence across India, especially in Tier 2 and Tier 3 cities. If they begin to leverage those retail touchpoints to distribute insurance products, it could significantly change how insurance reaches rural and semi-urban customers. Now, my question to you is, can Patanjali's massive offline distribution network really solve the last mile insurance accessibility problem in India? Let us know in the comments. Moving on to March 17th, which bought us one of the biggest deals in the Indian insurance sector in recent memory. Bajaj Finserv and its promoter entities have officially bought out Allianz's 26% stake in both their joint venture companies, Bajaj Allianz General Insurance and Bajaj Allianz Life Insurance. Now, this effectively ends a 24-year-old partnership between the two giants. Here's how the numbers break down. Bajaj Finserv and associated promoter companies are paying 13,780 crore rupees for Allianz's stake in the general insurance arm, valuing it at around 53,000 crore rupees. For the life insurance arm, they're shelling out 10,400 crore, which values that business approximately at 40,000 crore. What's interesting here is how the stake is being split among the Bajaj entities. Bajaj Holdings is taking up the largest chunk at nearly 20%. Bajaj Finserv is picking up a little over 1%, and Jamnalal Sons, another promoter group entity, is taking the remaining 5%. With this acquisition, Bajaj Finserv now has full control over the whole of their insurance business. Now, you see, this gives them complete autonomy in terms of product strategy, pricing, and long-term vision. It also ends any shared governance structure that previously existed with Allianz. But Allianz isn't stepping away from India altogether. In fact, reports suggest that they are already in talks with Jio Financial Services to form a brand new insurance joint venture. Now, if that happens, it could lead to a digital-first insurance offering with significant distribution capabilities given Reliance's scale and reach. Now, next up, on March 18th, the Hinduja Group officially completed the acquisition of Reliance Capital, a company that's been in insolvency proceedings for quite some time now. Through its investment arm, IndusInd International Holdings Limited, or IIHL, the Hinduja Group now owns 100% of Reliance General Insurance and a 51% controlling stake in Reliance Nippon Life Insurance. This deal marks the end of Anil Ambani-led chapter at Reliance Capital and opens up a new one under Hinduja leadership. Now, what's more is the group plans to list both these insurance companies on the stock market in the next 2 or 3 years. If you look at Hinduja's broader portfolio, which includes IndusInd Bank, Ashok Leyland, and Gulf Oil, adding insurance to that mix strengthens their play in the financial services and mobility sectors. This move also reflects the group's long-term commitment to diversifying their financial portfolio and capturing value in the insurance segment. Now, before we go ahead, let me again remind you that if you don't have a health or term insurance and are are on the fence about it and are worried that you might be spammed or might be pressured to buy one, let me tell you that Ditto functions very differently. We never spam and we never pressure you to buy. So if you want to compare two policies, or if you want to purchase one, or if you want to port or migrate or know anything about insurance, our IRDI certified advisors can help you with that. Ditto is not just another insurance advisory platform. We are your insurance buddies. You will find a link to book a call with us in the description. Now, back to the video. Moving down the calendar to March 18th, we got a word that LIC, yes, LIC, India's largest life insurer, is entering the standalone health insurance space. But rather than launching a new company from scratch, LIC is planning to acquire a significant minority stake in an existing health insurer. While the name hasn't been confirmed, industry chatter suggests that LIC exploring options like Star Health, Nivabupa, Manipal Cigna, or Care Health. The deal size is expected to be around 4,000 crore rupees, depending on the final stake and the valuation. This is a pretty smart move by LIC, and I'll tell you why. By buying into existing health insurance company, they bypass the challenges of building operations, teams, and networks from the ground up. Plus, with their massive brand recognition and unmatched distribution network, LIC could bring serious scale to whichever company they invest in. Strategically, this also allows LIC to offer a more comprehensive set of insurance products. Until now, their health offerings were embedded within life insurance policies. But this move would place them in direct competition with dedicated health insurers like Star Health, Care Health, and others. And finally, on March 20th, the UK-based Prudential PLC announced a new health insurance joint venture with HCL Group. Under this new setup, Prudential will hold a 70% stake, while HCL's promoter group, through Vamasundari, will own the remaining 30%. This marks yet another foreign insurer entering the Indian health insurance market, one of the fastest growing segments in the industry. And it makes sense. With rising medical costs, low insurance penetration, and growing awareness post-COVID, the opportunity here is massive. So now we have Prudential joining a crowded space where it will compete with existing players like Star Health, ICICI Lombard, and HDFC Ergo. The question is, can they carve out a niche, and how quickly can they scale? So to sum it all up, in just 1 week, we've seen 5 major deals happening, more than 50,000 crore rupees of value changing hands, and some of the biggest names in the business entering or exiting the Indian insurance market. From Patanjali to Prudential, LIC to Bajaj, this has been a landmark week that will likely shape the industry for years to come. We're entering a new era of competition, consolidation, and customer-first innovation in Indian insurance. And while it's too early to say how each of these plays will pan out, one thing's for sure, the industry is changing fast, and the biggest winners might just be the customers. That's it for this week's episode of A Week That Was. So if you found this helpful, make sure to hit that like button, subscribe to Ditto's YouTube channel, and share this with someone who wants to stay updated on how insurance in India is evolving. Thanks for watching, and I'll see you in the next one with more updates from the world of insurance. Happy insurance hunting.